Good morning and welcome to GrainTV. Today's March 1st, 2012. I'm Logan Burgess. To my right is Cody Bills. Cody, it's Thursday. Time for the export sales report. Take us through what we saw this morning.
All right, the export report actually met expectations. However, we did come in on the low side of the range. Corn came in at 690,000 metric tons versus an expected 750. Beans, 549,000 metric tons versus an expected 600. And wheat, 414,000 metric tons versus an expected 600 as well. If you look at the progress, we are at week 25 here. Corn is ahead of pace 23 million bushels, and we improved our position by 5 million bushels as a result of that bar right there. In the next coming weeks, we're going to have to continue to see strong export sales, which we have seen in the last 5 weeks. If you look at beans, though, this is where it really starts to take off. If you look, we're at week 25, behind pace 30 million bushels. But where we were 2 weeks ago, we were behind pace 53 million bushels, or around 53 million bushels. And we have improved our position 8 million bushels this week and about 16 million bushels last week as a result of those two candles right there. So I think that this, along with the fact that we're seeing export delays out of Brazil, I think it's all adding up to a situation where I expect to see stronger exports in the second half of the marketing year.
Yeah, I wouldn't be surprised to see that. One thing I guess that is important to keep an eye on is kind of two things that are going to weigh on U.S. Soybean exports here moving forward. This huge run-up that we've seen in the soybeans market, and with Brazil, that crop coming out of the field, that should lend some harvest pressure on their futures market down there, on the price to get beans out of Brazil. So it'll be important to keep your eye on that here moving forward in the weeks to come.
The pricing, I would agree. The pricing, we have seen a huge run-up there, and that could curb export sales. But I think the harvest pressure, that's seasonal, and that, of course, is built into the model. So if you look at our model, we're expecting to see relatively weak sales here. But what I'm saying is I think we're going to see better than expected as a result of the production failures out of Brazil, taking into account the seasonality.
Certainly. Well, we'll keep you posted on that here on GrainTV. One more little anecdote here on the export sales front. We did see that Iran was in the Chicago wheat market here this morning, purchasing about 120,000 metric tons of U.S. wheat. Kind of an interesting situation there after all the sanctions placed on them by the U.S., the EU, and the United Nations. So it's kind of unclear where that grain was sourced from. It was a U.S. company, but also it's kind of interesting how that grain was paid for. A few weeks ago here, we heard that the Iranians were paying for grain from other countries, specifically Russia, with oil and gold. Right now, out of oil, the easiest way to get grain from Russia down to Iran is through the Caspian Sea. There should be ice in the Caspian Sea for the next 2 to 3 months, so it wouldn't be surprising if we saw more sales coming to the U.S. for Chicago wheat. It should be lending some support to the market here moving forward.
Yeah, that's an interesting point. We're going to take a quick commercial break, and when we're back, we're going to see the charting landscape for the May contracts.
Oh, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
And welcome back to GrainTV. Cody, let's take a look at Fire Tip here and see how the trade in Chicago is panning out this morning. We're looking at corn down 6 here, soybeans down 5, Chicago wheat down 5, and on the Kansas City wheat contract, we're looking at it down 2. The grains look to be kind of trading lower here today. We're starting to look at May contracts here this morning. Yesterday was first notice on those March contracts, so it is time to start moving to May. Can you take us through what we're looking at here for May corn?
Yeah, absolutely. Right now, May corn is trading at 651. Yesterday, we were up to a high of 661.5. If you look at this line here, you'll notice that we came right along the high side of this trend line. There's resistance up there, not only from that high side of the channel, but also from a 200-day moving average. I guess my concern is, or my alert here, is that if you're looking to get long corn, this is an area that you want to be cautious. We're going to want to break out of these resistance levels before we can really get any kind of serious run to the upside. I see more of a potential for continuing to pull back, a continued sideways movement. Logan, soybean seems to be the major contract that is standing out, It has gained a lot of ground on corn. Can you take us through soybeans?
Yeah, Cody, taking a look here at May soybeans, you're absolutely right. You know, we have been on quite a run here in the soybean complex. We're now above our 200-day moving average, and a lot of technical traders here in the last couple of days were looking at this being in a pretty overbought situation. Yesterday we saw the RSI on May soybeans reach around 78, so we could be seeing a little bit of a technical correction here. But you know, U.S. soybeans appear to be pretty darn competitive right now on the world front. We see 15 to 20-day delays out of Brazil, getting Brazilian soybeans exported right now, so the U.S. soybeans will remain competitive here moving forward, but we should be seeing a little bit of a pullback here. Moving on over to wheat, looks like kind of a different story here from corn and soybeans. It looks like maybe we're finding a bit of a bottom here from the highs we printed last summer. You know, we've been on quite the downtrend here, but we are catching some resistance here around that 100-day moving average. You know, we could be seeing some technical short covering as well. Right now we see the managed money in the Commitment of Traders report. They're about 50,000 contracts net short right now in Chicago wheat. So it'll be interesting to see tomorrow when the Commitment of Traders report comes out to see where those funds stand this week here. Obviously affecting our competitiveness on the wheat front is going to be that dollar index. Can you take us through what we're seeing there?
Yeah, you know, the dollar index is something that I talked about a little while ago. You know, I said that I expected there to be a little bit more support down around the 79 level, and we didn't get it for a couple of days. But I really want to kind of revisit that and explain to you why I'm still very bullish, I guess, on this dollar index, primarily because of Europe. If you take a look at the reason why we rallied yesterday, it was a result of lending. You know, to date, the European Central Bank has lent over $1 trillion to these regional banks that needed help, needed capital during this Greek crisis. Now, I think once that fear factor of the immediate collapse, you know, of the European Union as a result of Greece has subsided, I think people got excited and the euro has rallied. But I think you're going to have to look at the effects of the austerity measures. Right now they have a significant unemployment rate. They're going to be lucky if they get out of the year with a 1% GDP growth rate. It's most likely going to stagnate. If you take a look at the fundamentals there, a stagnating economy versus, you know, we saw a revision yesterday for the U.S. economy from 2.8% in the fourth quarter up to 3%. You know, we see emerging markets at 6% GDP, possibly 8%. You know, the bottom line here is the euro is going to be suffering here fundamentally. And I think that in the 6-month time frame to the end of the year, I think we're going to see the euro take a lot off the table compared to the dollar. I think the dollar is definitely going up here to test the highs that we saw printed earlier this year. So the bottom line here is going throughout the summer, I think we're going to be fighting a higher dollar. You know, that's just going to be an overall theme, I think, throughout the rest of this marketing year.
Certainly, that should weigh on grains here a little bit domestically.
Yeah. Absolutely. We'll be back on Friday for the weekly wrap-up. If you'd give us a call, 877-472-4607, we'd be happy to set you up with this fire tip demo. You can take a look at all the contracts we talked about today and hedge your crop. Have a good one.